So when exactly should I start my Social Security benefits? That is a decision that every retiree will have to make. Today, I want to give you some helpful information to help you with that decision. Thanks for tuning in. We haven't met before. I'm Planner Mike, a certified financial planner professional and owner of True Wealth Financial. I believe that retirement should be prosperous, enjoyable, and purposeful. This show is dedicated to helping Christians retire with confidence and clarity so that they'll be freer to serve God and live the life that they truly desire. So today I want to begin talking about Social Security benefits. But to start, I want to show you how this fits in or relates to our True Wealth Total Retirement System. Now, as a reminder, this system comprises of an overarching plan and 4 supporting elements, or pillars if you want to think of them. First and foremost, Social Security benefits will support the retirement income pillar. When we talk about the retirement income, we talk about creating an income that will sustain you and last you through your retirement lifetime. Generally, there are 4 types of sources that we use: human capital, social capital, or in this case, Social Security, financial capital, and personal use assets. So while it primarily supports the retirement income element, the reality is it also has an indirect impact on the other elements as well. Depending on when you take your Social Security will have an impact on your financial investments. If you start Social Security earlier, you might be able to delay your investments of taking them out. If you delay your Social Security, you might have to pull income sooner, so it indirectly affects that. Social Security benefits also have an impact on taxes. Social Security is taxed like no other income in the U.S. tax code. And depending on whether you're married or not, it plays a large role in whether you get survivor benefits to your loved ones after you pass. So it's a really big decision. Not only that, the biggest challenge with Social Security is you only get one time to make that decision on when you start. And there's a lot of downstream impacts based upon that decision. So because of that, today I want to start a series talking about Social Security. Over the next month or so, we'll talk about how to calculate benefits. We'll talk about spousal benefits. We'll talk about survivor benefits. We'll talk about specific timing and planning impacts. And we'll talk about taxation of Social Security. But for today, I want to give you some basic information on it. I want to talk about why Social Security might play a bigger part in your overall plan than you imagine, a couple key factors to consider when deciding on when to take it, and I want to give you a micro action at the end as it pertains to your Social Security benefits. So the Social Security Act was signed by President Franklin Roosevelt. It was really born out of the Depression, and its primary focus was to be somewhat of a foundation or an insurance policy. In 1935, when FDR signed it, he said this, quote, "This Social Security measure gives at least some protection to our citizens who will reap direct benefits through old age pensions and through increased services for protection of children and prevention of ill health." We can never insure 100% of the population against 100% of the hazards of life. But we have tried to frame a law which will give some protection to the average citizen and to his family against loss of job and against poverty-ridden old age. That is the foundation of what this act was meant to do. Now, the reality is Social Security Administration, Social Security Act, like really all government agencies and laws, they grow over time, right? Things evolve, things change. And so now they do a whole bunch of things. They do actuarial information. They are the best source of actuarial information because they know when people are born, they know when people will die. That is how Medicare enrollment is taking place through Social Security Administration. Plus, they give financial benefits to different people at different stages of life, disabled, old age, dependent survivors, and things like that. Now, how it's funded is it's not really funded from the government, right? It's not a charity. It's not something that the government just doles out and gives to people. It's obviously administrated through them, but it is funded through active workers, people that are actively working. Again, FDR said at the signing of it, we must not allow this type of insurance to become a dole through the mingling of insurance and relief. It is not a charity. It must be financed by contributions, not taxes. So the Social Security benefits that we get, it does not come from the federal government per se. It comes from other people that are working, right? So as an example, today I am still working and I pay in every year to the Social Security or FICA taxes. And the people who are receiving benefits are receiving the funds that I pay into those, right? And so Social Security is funded essentially by you and your employer. We call them payroll taxes. So every paycheck, if you look at your pay stub, you'll see that you put in 6.2 of your taxable wages. And maybe you know, or maybe you don't know, but your employer also puts in 6.2% of your taxable wages as well. Unless, of course, you're self-employed, under which you know you get the privilege of paying both sides, the employer and the employee, and you pay 12.4%. So thank you for doing that for all those self-employed people. So as we continue to talk about Social Security, really in this episode here, as well as those come, I really want to just focus on retirement benefits. That's really what we're going to talk about. Again, they do a lot of different things, but I want to specifically talk about retirement benefits. When it comes to benefits, you might be surprised how big of a role they actually play in supporting your retirement income and your retirement plan. So there's a little bit of lingo that's involved. It's government, right? So there's acronyms and rules and regulations and stuff like that. But you'll see if you ever read any documentation for them or literature for them, it'll talk about the primary worker, Anytime you see primary worker, that is your benefits, right? When I read primary benefits, that's my benefits. There are spousal benefits, there are dependent benefits, or survivor benefits, but the primary worker, that's talking about you. So the way anyone qualifies for Social Security is they have to work 40 quarters, so essentially 10 years. There's an amount of money each year that defines how much you have to make in a quarter. And if you make that much money in a 90-day period, it kind of counts. It's not really you have to work 90 days to make one quarter. It's like you have to make, I'm making this number up, maybe it's like $10,000 in a quarter in a 90-day period in 2025 to get a check for a good quarter. So you have to have 40 of those over your career. Doesn't have to be consecutive, has to just basically be in your lifetime. And in most cases, you have to be 62 years old to get benefits. There are a lot of exceptions when it comes to Social Security, but again, primary worker, that's what we're going to be focusing on, is your benefits. You have to have worked 40 quarters to be eligible, and you have to have reached the age of 62. So what I think will help unpack this a little bit is give you some examples. So I'm going to give you one of a single person and then one of a married couple. So from a single person here, we're going to use single Steve. And single Steve has worked since 1985 until last year, 2024. And he made the average income of that year. So whatever the average wage was for that year, that's what he made. And he worked 40 years. He's going to begin receiving his benefits at age 67. Age 67 is his FRA, full retirement age. That is when he gets his PIA, primary insurance amount. Again, there's a lot of lingo involved here. And we can see here that when Steve starts getting his income in 2027, he's going to get $25,175. Now, that's probably going to inflate the next couple of years for COLA. There's COLA increases every year, but it gives you an idea of what he's looking at. Basically, a little over $2,000 a month, right? You see, $2,000 a month, that's not a lot. But if we look at that over the scope of his life to age 90, so from 67 to 90, and we download those total amounts and then total them up, you'll see that that amount actually comes to be over $875,000. Now, I don't know where you come from, but where I come from, $875,000, that's a lot of money, right? So Steve's getting a large chunk of change for his Social Security benefits over the scope of his lifetime. So our second example here is Robert and Rebecca retiree. So in this situation here, we had Robert working for 35 years, and he made the maximum. He paid into the maximum amount, the wage base of Social Security for every year. And Rebecca, she never worked, right? So we have one spouse maxing it out, one spouse getting nothing. They too are going to start their Social Security at age 67. And we can see in the year that they get it, Robert gets his PIA amount of about almost $50,000. And Rebecca, she gets spousal benefits. And again, we're going to unpack spousal benefits in a whole nother episode coming up later here. But essentially together, they have almost $75,000 of income in the first year that they retire. And again, it'll inflate up a little bit because of COLA. So again, if we run that from age 67 to 90 and we total up both of their Social Securities, it's over $2.5 million. So this couple can expect to receive $2.5 million of income over the scope of their retirement plan. So you might be asking yourself, okay, well, what is the maximum amount that someone can actually get, right? So we used Robert here as an example, but he stopped working a little while ago. The maximum amount at full retirement age you can get today in 2025, it changes every year, is $4,018. But you can hold off on starting your Social Security up to age 70, and you can kind of increase it a little bit more. And again, we're going to kind of go how it's calculated and all those delayed credits and stuff like that. But the maximum somebody in 2025 that has delayed it to age 70 can get is $5,108 a month. So a little over $60,000 a year, right? And that's just the spouse. And if they're married, then that means that spouse would get half. And again, we'll unpack spousal benefits later. But that means that couple's receiving $90,000. And you'll be surprised to know that it's like almost all tax-free when we get to talking about taxes, right? And that spouse, if the primary one dies, as we'll unpack when we talk about the survivor benefits, the surviving spouse will slide into the primary owners and receive that $60,000, right? So again, Social Security benefits can play a large role in your income, which is why it's so important to decide when to take it. So I briefly want to unpack here some key factors to consider when you're deciding when to start Social Security benefits. But first, if you're finding this information helpful and valuable, please hit the like button. It'll let me know to do more shows like this. Plus, it's a great way to say thank you. So as you begin to think about when you should take Social Security, there's a couple key factors that you want to take into consideration. The first one is, how much income do you actually need, right? Now, the best way to go about this is to have a holistic plan where we've outlined your needs, wants, and wishes. We talked about that before, because Social Security is just one piece of it. And so if you have other income pieces that you can use and sketch together, you might be able to delay it a little bit, right? The less source of income, the more earlier you might need to take it, right? So, but you have to know what's the nut I'm trying to crack each month, right? And how much do you have from those other sources, right? So those are the first two things you want to consider. The next thing you want to consider is, how much would I actually get from Social Security? Now, again, next week, we're going to unpack how to calculate those benefits. And I'll give you some resources that you can go to utilize and actually calculate your benefits. But you want to know how much you're actually going to receive. Another thing to consider is, are you going to keep working? Or is there a potential that you'll go back to work, right? Like maybe you just need a break, a sabbatical, but you're going to go back to work. There is earnings limits. So anytime you're under your full retirement age, so 67 for most people, and you earn income, you actually lose benefits, and you actually have to pay it back. I've had some clients that are doing this now. They're still working. They took benefits early, or they have survivor benefits, and they actually have to pay it back. Now, the good news is you'll get that back later on, but you do have to pay at least earnings limits for you. Another thing to consider is your health, right? So what's your current state of your health? What's your family history, right? Now, obviously, just because your dad or mom had this doesn't mean you will, but you might too, right? So, and there is an element of break even to this, right? The longer you wait, the more you get, the earlier you take it, the less you get. So there's this kind of break even that, there is a factor of how long you're going to live, right? So that's an element to consider, your health. Another one is, are you married, right? So are you married, or are you planning on getting married? Because there is an element of spousal and survivor benefits. So even if you're 62, 34, and you're not married now, but you're in a serious relationship and you're thinking about getting married later, right? There is an element of the spousal and survivor benefits that you want to take into consideration. So as you can see, there's a lot of factors that you'd be wise to consider when talking about when to take Social Security, which is why we're going to unpack these over the next couple of weeks so you can make an informed, intelligent decision. As we conclude, today we talked about the basics of Social Security benefits. If you're still with me, consider subscribing. That'll help get the channel into the hands of others who need this information. And more importantly, you'll be notified of future episodes. Now, ideally, this should be considered in conjunction with an overall comprehensive retirement plan, one that considers your retirement aspirations, your goals, your income needs, your timing elements, and a whole lot more. I understand how overwhelming and confusing it can be. If you're looking for some help, if you have any questions, please feel free to send an email to mike@truewealth.show, mike@truewealth.show, and I'll try to get you some information that can help you. But for today, a good micro action for this week might be to go to the Social Security Administration and either create an account if you don't have one, and or get your current statement. Recently, the Social Security Administration has been changing the way they log in. They no longer allow you to have usernames and passwords. So if you don't have one, you'll have to create one with either login.gov or id.me. You can simply just go to ssa.gov and you'll see a big thing with sign in the upper right corner. Very easy to start doing that. So if you don't have an account, create an account. If you do have an account, go log in and pull your recent Social Security statement and take a look at it. Remember, every retiree will be faced with the dilemma of when to start Social Security. As you saw today, it can play a big role in your overall retirement income. Hope this helps you on your path to a prosperous and enjoyable, purposeful retirement. Until next time, have a great day and God bless you. Thanks again for taking the time to watch this week's episode of the True Wealth Financial Show. I encourage you to like, share, and subscribe so you don't miss any future episodes. Additionally, you can find more information on our website at www.truewealth.show. One final note, though, as we wrap up to today's show. While I hope the information was helpful, valuable, and insightful, it's really for information and educational purposes only. Prior to making any decisions or taking any actions, I'd strongly encourage you to talk to your legal, tax, estate, or financial advisor who's familiar with the unique circumstances of your particular personal situation. Thanks again for watching, and until next time, hope you have a great day.